welcome to Only 3.0. Today I got a very interesting article to walk you through. Just to pick up on the video I made yesterday about the Ethereum price after the merge and why I think it was such a monumental event but has not yet been priced into Ethereum, and why Ethereum is a significantly undervalued asset trading at today's prices. So just picking up on this article here from Coindesk, it's quite interesting. Maybe could give some background, add some more light into some of the catalysts that might be driving Ethereum's price down at the moment, making Ethereum not really reflect what the fundamentals of the asset are currently showing given the upgrade after the merge. So we all know that Ethereum's it's moved from a proof of work consensus mechanism where miners effectively used hardware to mine Ethereum, very electricity intensive operation, very costly operation. So the Ethereum that they mined effectively prior to the merge, because these miners have no more interest in Ethereum after the merge, given that their hardware they use to mine it is effectively useless, because it's transitioned to the proof of stake mechanism where you need to stake Ethereum to get rewards. No longer do you need to use mining equipment to mine it. All this equipment they've purchased just pretty much useless right now. So the miners no longer have an incentive to be a part of the Ethereum ecosystem other than to hodl the asset because they think it's going to appreciate in value over the long term. So what you find now is miners have dumped over 16,000 ETH over the last week since the merge. And I would assume a lot of this is to pay for operational costs. So electricity costs and other costs to fund their mining operations. Now their revenue is likely to have significantly fallen, given that they're not generating as much revenue as they were when they were mining ETH via proof of work. And if we read this article, they said that the miners still have about 245,000 ETH left. This is about $319 million. So that could put immense sell pressure on ETH over the short term, in the next couple of weeks. And it's definitely something to watch if you are looking to get a position in ETH anytime soon. Where I don't think this is going to be a significant price event, where I don't think it's going to draw down ETH by about 20%, 30%, because this is a very small percentage of the Ethereum daily trading volume, which I'll show you in a moment. I think it's something to watch if you are looking to potentially get into Ethereum and accumulate position, because this is a decent amount of sell pressure coming into the market, and it could, where I don't think it could have a necessarily big impact on the price, I think it could potentially suppress price in the next few weeks. So as reading through the article, the miners accumulated nearly 341 million ETH prior to the merge. They've sold about 20 million, so they've got about 320 million left. Given that their machines are no longer useful in mining Ethereum, they don't really have much of an economic stake in Ethereum anymore, so their potentially will be looking to offload. The ones that don't believe in the long-term proposition of holding ETH will be looking to offload these sometime soon. So why don't I think this is a particularly high price impact event and more a short-term blip for ETH? Is because 320 million in the grand scheme of things is a very small percentage of ETH's daily trading volume. So the market of ETH should be able to absorb this selling pressure. So let's look at this for instance. So if we look at Ethereum here, we can see that the daily trading volume of Ethereum, well, the market cap of Ethereum is $155 billion. So that's a big asset. 319 million is a very small percentage of 155 billion. However, what's the potential of this to move the market if the miners was to just dump it on the market tomorrow? Well, if we look at the 24-hour trading volume here of Ethereum, we're looking at a trading volume of about 17, close to 18 billion. So I would argue that doesn't seem correct to me. Such a high trading volume relative to the market cap seems a bit off. So let's go and validate these numbers. So if we look at Binance is the biggest exchange by spot trading volume, and we should typically be able to believe in Binance's volume because Binance has proven themselves to be a very transparent, open exchange. So I would assume Binance holds a significant proportion of the market, probably about 80% of the spot trading volume for any typical crypto asset. And if we see here on Binance, Ethereum has about a combined 4 billion daily 24-hour trading volume as of today. So I think that's probably more closer to Ethereum's real trading volume versus the 18 billion, because there's a lot of wash trading in cryptocurrency. Just be aware of that. You might see an asset with a lot of trading volume in crypto, but it's not always you should believe that, because there's a significant amount of wash trading, fake volumes on exchanges. So let's kind of validate my theory that I think Binance is about 80% of the market. So if you look at this website here, bitcointradingvolume.com, the total Bitcoin, I know we talk about Ethereum, but let's just use Bitcoin as a proxy here. So the total 24-hour spot volume of Bitcoin is about 8.5 billion, of which Binance accounts for about 7 billion. So doing my maths, that's about 84%, 85%. So I would assume that Binance has similar proportion of the Ethereum trading volume as it has the Bitcoin spot volume. So again, Ethereum's about 4 billion daily volume. Let's kind of check this again against Missouri, which is a very good data analytics platform, something you should familiarize yourself with, one of the best in the business. So if you look at Missouri, Missouri has Ethereum's real trading volume of yesterday at 4.9 billion. And if we look here at the past couple of days, we can get a sense of what the true trading volume of Ethereum is. As you see on the 17th, it was 2.25 billion. Today we're about 2.58 billion. Yesterday, as I said, 4.9 billion. Day before 5.28. Day before at 3.43. So I think if we average out these movements, it's probably clear to say Ethereum's daily trading volume is around $4 billion. So if we then go back to what we said with regard to the miners having about 245,000 ETH left, which is about $320 million. If they were to just dump that all in the market tomorrow, that accounts for about 8% of Ethereum's daily trading volume. And I probably think that will probably move the price by about 10 to 20%. The 10 to 20% range comes from the fact that even though the actual miners sell-in might be about a 10% move, there'll be a cascade of positions being liquidated. There'll be other people start short selling once the market makes a dramatic move. And FUD tends to move markets. So if they did dump all this, they could move the market, but not by a significant amount. So here's why I think where this does seem slightly bearish, it's a very small impact event, and I think potentially has the potential to move the market by maybe 10%, 15% tops. And it's unlikely that miners will dump $320 million worth of ETH at once. They'll probably do this over a longer period of time, over a couple of weeks, couple of months, and it's unlikely they'll sell all of it. So headline on the surface looks bearish, but I think this is something the market can easily absorb, given Ethereum's daily trading volume and market cap. And yes, it could put some suppression on the price in the short term, but I think the long-term fundamentals of Ethereum will play out in time, and it's a fundamental asset to look to accumulate at these prices if you think there is value here. Again, not financial advice, make your own investment decisions. But ETH is definitely something that's on my radar as a significantly undervalued cryptocurrency asset at this point in time. Thank you very much for tuning in to Only 3.0, and I hope you have a wonderful and a fantastic day wherever you are. Please like, subscribe, and share. Have a good day, everyone.